So as Mike had mentioned,
sorry about that. I turned on the recorder.
That's okay. As Mike mentioned, we've been very fortunate to see firsthand some operators be rewarded for keeping people on payroll. So excellent to see. Lisa Pritchard is also part of the call. So Lisa, why don't we just jump right into it and go through the slide deck. The COVID relief has been substantial. So in our arena of credits and incentives, doing this almost 25 years, we've never seen so much government funding. In the past, these funds were usually for larger businesses, but in this case, businesses with as few as 3 employees have benefited tremendously. And what really opened up the doors for greater participation was when the CARES Act and then later on the American Rescue Plan Act passed. Businesses that received a PPP loan, which was a substantial, millions of businesses received PPP, they were originally not eligible. So a lot of operators that their CPA or bookkeeper or some advisor said, well, you're not eligible. But after 4 different revisions, almost every assisted living operator or memory care group that we've worked with has qualified. And the benefit is very significant. So if a business was able to keep people on payroll, they had to be W-2 wage earners, you would receive up to $26,000 per employee. Small sample set there. A business that has 20 employees could receive up to $520,000. So it's a very, very substantial benefit. And if you received a PPP loan where you were originally not eligible, now you are. Lisa, if you could, next slide. These are the 2, we're not going to spend a lot of time here, but these are 2 slides that open the doors up for a lot of companies. The benefit originally when the CARES Act passed was $5,000 per W-2 employee. That was later amended, and in 2021 through the American Rescue Plan Act, that grew to $21,000 per employee, $7,000 per quarter. So we're able to retroactively go back to 2020 and 2021. And for those employees that you had on payroll, we're able to secure this benefit. And the maximum benefit is $26,000. Originally, they were going to have the 4th quarter included, but that got repealed and those funds got reallocated. But that benefit is still very material. Next slide, please. What we wanted to point out, and Vern, this is your point, where what's the difference between the PPP and these ERC funds? The ERC funds are going to be much more beneficial because of the, there's a lot more flexibility. So with the PPP loan, it actually was originally supposed to be a loan, and a lot of businesses have been forgiven. But in the case of the ERC, there's not going to be a loan application. There's also not going to be a forgiveness process. And there's also not going to be any restriction in how the funds could be used. So example, on the PPP, a certain amount had to be allocated towards payroll and then other operating expenses. When you receive your ERC benefit, there aren't any restrictions, nor will there be any forgiveness that's required. The other program that a lot of businesses also are eligible for is what they call the employee sick leave credit. If any of your employees had to take care of a family member or they themselves had COVID, then there's an additional program that's part of that. And it has to do with if they were paid while they were either self-quarantined or taking care of a family member, or they themselves were sick. And that's another program. So you've got 3 programs that are the primary programs that are part of the CARES Act and the American Rescue Plan Act. Next slide, please. So one of the things that we carefully review is that a lot of businesses were approached by their payroll companies and they said that they could just automatically qualify for the ERC. However, what we have found is that the payroll company, if they try to do it, they'll block out certain periods of time. And what you could do by just blocking out certain periods of time and not actually reviewing how those PPP funds were used, you could leave up to 14 weeks of qualified wages unclaimed. There was also the healthcare benefits. So if you offer your employees healthcare benefits, those are also qualified wages that can be used as part of your calculation. And then finally, what's going to be most important is that your PPP, your ERC, and the sick leave credits, they all interplay with one another, but those credits cannot be, or the wages cannot be claimed off the same wages. So when we go through our software program, we'll look at the PPP, the ERC, and the sick leave credits. Then we have to properly categorize them. And that's very important because if there's ever an audit, we have to show the method in which we used to generate your credit. And going back to how Mike opened this up, for us, reputation is so important. We saw a lot of consultants jump into this space when the CARES Act passed. And we think a lot of them are going to be gone when these programs sunset. So you got to make sure when you're interviewing companies, ask them how long they've been in business and make sure that somebody's going to be there to be able to support an audit in the future. So you got to show your worksheets, your methodology, how you claim the PPP, ERC, and your sick leave credits, and how those interplay with one another. Next slide, please. Other items to consider. We addressed this and touched upon it in the previous slide, but we want to make sure that we're also capturing for those operators that offer health benefits to your employees, those can be used as part of your calculation. And ultimately what that means is that you could receive a greater benefit. It's not a requirement that you offer health benefits, but if you do offer health benefits, there's more wages that we can use to maximize your credit. This is kind of also going back where we hear this probably on a weekly basis and sometimes, every day where people say we're not eligible. And the news is that when the program was originally introduced, that information that was received is they were accurate. However, with the 4 rule changes, it just broadened the number of businesses that could participate in the program. So it's worth a 12 to 15 minute discussion, just determine your eligibility. Next slide. This is just giving you an idea of the businesses and industry types that benefit most. Obviously, restaurants, hotels and hospitality, independent schools, gyms, manufacturer, any franchisees, nonprofits. You could kind of see the list here. And fortunately, through Mike's connections, we were able to now have assisted living facility operators as another industry type that can really benefit. So we've got some tremendous references of owners that you could call and ask their experience of what it was like to apply and did they fulfill and how much paperwork was involved. So it's always important to have a couple of operators that are like yourselves that you could contact and see, hey, is this real or too good to be true? So I think it's very important to talk with other operators that might be in your same shoes. Next slide, please. Once again, we could kind of roll through this, but it gives you an idea of the amount of funds from other industry types that are participating in the program. So nonprofits, hotels, churches, anybody that has W-2 employees. Next slide. And then just a case study. This was one of my favorites. It was an operator out of greater Atlanta area. And they were really challenged and they were actually going through a couple of lawsuits. And I know that, so now I kind of became more familiar with all the things that can happen and why legal counsel is so important. But it was really just kind of difficult to see how that operation was just really challenged by COVID. And when they got these checks, they didn't come all in one check. They came in multiple checks. But to see this kind of business be able to kind of keep their doors open, they're actually considering some challenge, some difficult options. But these funds basically were a lifeline to keep them going. Next slide, please. So just very brief about our industry and our company. We track various grants and tax credits and other financial programs. All our services are performed using what we call a success fee model, meaning there's no cost unless you receive a check through the program. There's a lot of consultants in our space that charge retainers or an hourly rate, and that's not really fair because it can take up to 18 to 20 weeks to get your refund. So we ride that period out with you until you actually get a check. And once again, once you receive your check, you want to have a firm that can provide full support in the event of an audit. So our reputation's everything. Small business operators, oftentimes there's not a lot of funding for them. It seems like the UPSs and Amazons of the world get all the money. But in this case, this is one program that's designed really for businesses of 500 employees all the way to 2 employees. Next slide. A little bit about our methodology. We have a very brief call to see if you're eligible. And then we have a team that concentrates solely on the various CARES Act programs. We complete all the necessary forms and applications. And then eventually, as I mentioned earlier, 17, 18, 19, 20 weeks before you get your checks. So there is a lag time, and that is very important, so you can budget that out. These funds are not going to come overnight, and it's best that we set that expectation up front. The good news with the wait period is that they will send you the checks with interest. So there is a wait period, but you would get your refund plus interest. Next slide. And then just our contact information. So yeah, we're very thankful for the opportunity you provided. Myself, Lisa, and Mike are here to answer any questions. So thank you for your time and giving us this opportunity.
Wow, that's pretty amazing. Those are game-changing numbers for some of these smaller facilities that got beat up hard by COVID. So I would I would think anybody with a small business would apply for something like this. What are your fees? What do you charge? Is it like a percentage of?
Yes, it's a percentage, and it depends on its scale. So the smaller the operation, the fees are just a little bit more, but it's always just a percentage of the benefit that's received. And when we are out there in the market every day, we're typically 40 to 50% less. The reason first why such a big gap between fees is that this program was designed to put the money in the hands of the employer, not a consultant. And when you're thinking about it in the long term versus closing your doors when these sunset, our fees are very reasonable. And the fact that we ride that out with the client until they get their check, we believe that shows true partnership as opposed to asking for some type of fee up front.
Brian, I'd also like to add that as you're, having discussions with ERC service providers, one of the questions that you should ask is their cybersecurity protocols, because remember, this is a payroll tax credit. So in order for us to calculate your credit, we are going to be dealing with employee payroll. Due to the nature of our business in general, just beyond this program, our systems are set up so that that sensitive employee data is handled in a way that all the security measures are in place and no more than 2 people in our firm will ever have access to that data. So I think it's really important that that question be asked of any potential service providers that you're looking at.
Lisa, that's a great point. And also make sure that, the firm you're evaluating also has either a CPA, CPAs on staff, or they're registered to be able to sign what's called a Form 941X. There's on the IRS website, there's what's called a ghost tax preparer, meaning that they'll go through the calculation, but they won't actually sign the 941X. So make sure that they're licensed and able to sign that 941X, which is, between the cybersecurity, longevity, and the ability to sign the return.
So how does the PPP come into play? If somebody got a PPP loan for $100,000 and, has a dozen employees or whatever it would be, how do those two interplay?
Lisa, if you could take that since you're the expert.
Sure. So essentially what our team does is we will collect some initial information that we'll use to determine your eligibility. Once we've defined the time period that you're eligible for the credit, we will then look at the wages that are paid to employees during that eligibility period. If during that eligibility period you use PPP wages or PPP funds to pay wages, we then have to back out those PPP wages from the equation. So whatever wages are left during that time period that were paid with non-PPP funds would be used in the calculation of your ERC. The good news is that I would say probably well over 80% of our clients have participated in one or both rounds of PPP. And in the majority of cases, after we removed the PPP wages out of the eligibility period, we were still able to find qualified wages to claim under the employee retention credit. Now, whether or not we were able to find enough wages to hit that max benefit varied by company, but the good news is we typically are able to still find wages to claim.
So part-timers are included in that then? It's based off the wages you paid?
Correct.
The hours that you paid?
Yeah, so full-time and part-time wages would be included in the calculation.
Wow.
But must be W-2 employees.
Correct. W-2, yeah, we're always talking about W-2 employees under this credit.
Well, it sounds pretty amazing. I'm surprised I'm not getting more questions on this too. So anybody with a question, just feel free to speak up.
I can share a little bit. I think probably there's some, I'm sure there's some questions about the amount of time that an operator or owner would need to invest in this credit. And so really our goal is to make this process as efficient for our clients as possible, because we know you have businesses to run and that's your number one priority. So our process is we have a 2-page service agreement that outlines our fees and scope of work. And with that, we send what we call our ERC pre-qualification data request form. That form typically takes, at least my clients have told me, it takes them less than an hour to fill out. We're going to ask for your 2019 employee headcount. We're going to ask for your gross receipts by quarter for 2019, 2020, and 21. We're going to ask about your PPP loans, how much you received, when you received it, how many weeks it covered, and what percentage was applied to payroll. And probably the most important section for this group here would be the government orders section that basically asks how your operations were impacted by COVID mandates. And so that's where you would list a kind of a bullet point of all the different changes to your operations based on whatever mandates were in order that you had to comply with. Social distancing of residents, not having the ability for family members to visit residents because of, again, the potential of spreading COVID, not being able to tour provide tours of the facility to prospective families and clients. All those types of things, having to do health screening of employees each day. Those are the types of things we would be looking in for Section 4. Once we get the signed agreement and the data request, then that goes over to our ERC team, and that team's headed by Maggie Chapman. She would then reach out to you for a 30-minute kickoff call. In that, she probably has some questions about the information you provided. But at the end of that call, she will tell you the time period that she believes you're eligible for the credit. And then at that point, she will request copies of your 941s for that particular period and payroll reports. Once we have all that information, our team at that point has everything we need to complete the analysis and the calculations. We ask for 3 to 4 weeks to complete that process, because again, we're looking at it on an employee by employee basis. And it's really important that we properly categorize the wages correctly. Once that we've calculated your credit, Maggie would then reach out to you to review the credit amount, answer any questions you may have, and then she would send you the amended 941s, your quarterly payroll reports for those quarters that you're eligible for a credit. You would review those, sign them, and then they get submitted to the IRS. So in total, you know, it's really going to be maybe a couple of hours worth of work on your end, and obviously a lot more on our end.
Lisa, there was also a question that the ERC refund is not taxable when received, but the wages equal to the amount are subject to disallowance rules. So a taxpayer's wage deduction for a taxable year must be reduced by the amount of the ERC related to the taxable year. So you do not, the ERC refund is not taxable when received.
Right, but you will need to go back and amend your income taxes for those years in which you received a credit. You're going to reduce the wage expense by the amount of the credit you received in those particular years.
So you're going to have some back tax hits on that. They probably wouldn't penalize you for that, though. I'm assuming you just pay a little higher income tax on your business if you had.
Right. And what we've seen again is, as Bryant mentioned earlier, because it's taking the IRS some time to process this, you are earning interest on that refund. And what we've seen is that the interest earned would typically offset any impact to your income taxes that you have to amend in 2020 or 2021. It kind of like offsets almost. But again, we want to make sure that people understand there would be the need to go back and amend your 2020 and 21 income tax returns.
Okay. Looks like we have a question from Sandra.
Hi, yes. Okay, so are you all saying that we get the credit for both years, 2020 and 2021?
So the credit is available for second, third, and fourth quarter of 2020 and first, second, and third quarter of 21. What we would do is, based on the information that you would provide us, is determine your eligibility for that time period. So really, I think when it comes to assisted living facilities, the government orders that are in place are going to really help determine the period of time that you would be eligible for the credit. So for example, California ranked in the top 10 states with the strictest COVID mandates on the books. So for those operators in California, that works to your benefit, because you had to comply with those government mandates for a longer period of time, say, than maybe another state that didn't quite have as strict rules. But we would go through that process to determine your eligibility period for all of those quarters.
Okay. Thank you.
Do we have any other questions? I'm thinking we should.
Well, and if the group's shy and would prefer to maybe address some of these questions offline, please, we've provided our Calendly link, our contact information, truly in a 15-20 minute call, we can really get into some of the details specific to your organization and determine your eligibility, and just answering questions you may have. So please contact us. We're happy to have these conversations.
I did drop that link into the chat. If you're having any issues with the QR code or not comfortable with that, there is the link that you can click on.
Well, I think this is pretty amazing, and I would suggest everybody who had employees during that time frame make that call. As assisted living, I know you guys have got, even a single home has, a dozen employees, and you guys are spending, close to $200,000 a year in wages. I would bet, and correct me if I'm wrong, Lisa, but if you pay yourself as a W-2, you count in that as well. Would that be a correct assumption?
Unfortunately, this particular program has some very different attribution rules. So owners and any family members that are on payroll, considered W-2 employees, their wages cannot be included in the calculation of the credit, unfortunately.
Oh, darn.
Yeah. Yeah.
I guess it is double dipping, but
it's worth the look. And Vern, what I found too, working with other incentives, so many times, I think about some of the training grant incentives and that these dollars are earmarked, and you need to make sure that we're applying those dollars to specific sectors of your business or how you're training or what have you. This program is unique to that, is that those dollars can be used however you see fit as an owner of the business.
so if they get a few $100,000 and want to expand their business and maybe go buy another assisted living, hey, we just helped your funding.
Right.
Hint, hint. Okay, Jan's got a question.
Thank you. Excuse me. It says here on this last screen, a 15-minute consultation, but what kind of things would I need to have available to keep that at 15 minutes? Because I don't know most of this financial stuff off the top of my head.
So what we'd be looking for is, it would be helpful if you had your gross receipts by quarter for 19, 20, and 21.
19, 20, 21.
And then second, just if a list of all the different operational changes you implemented. I'm sure you know those off the top of your head. But really so what we're doing during that time period is I'll be asking some questions to really identify which of the eligibility tests you could potentially meet. And it's okay if you don't have that information available. We can send you the data request to complete and get that information from you later, after the call. But
even if initially we just knew the number of W-2 employees and the state where you have operations, because oftentimes we'll have that in our database on which orders were in place in which state. So even if it's just number of W-2s and states where you have facilities.
By quarter, by?
So typically we would need the gross receipts by quarter.
Right, but the number of W-2 employees.
That will be your 2019 employee headcount at the average number throughout the year.
And I think most of the participants in this call are going to have definitely well below the 500, if not 100. So that might not even really be too much of an issue. So we got to see whether you qualify under 500 or fewer employees or 100 or fewer. And I think most would be in that 100 or fewer category. So how many employees do you have on average in 2019?
I know it was under 20. I can't remember if it was 12 or 15. Somewhere in that ballpark.
That would be great. Which state?
I'm in Colorado.
Okay,
But thank you. That helps a little bit for me to be better prepared for a phone call, you know, to be able to at least think ahead of time on some of these numbers so I can have them for you more quickly.
thank you.
That was an excellent question, Jan.
Thank you.
Anybody else? Okay, well, thank you to Bryant and Mike and Lisa for this presentation. I'm sure you're going to get some phone calls from this because why would you not? Why would anybody not at least call and spend a few minutes to figure out if they're eligible? It's, I hate to call it free money, but it's kind of free money. And nobody minds that. Certainly the PPP was a nice bonus for everybody. And if you can get something on top of that, it really helps your business. And, you know, all these small businesses, cash is king, and that's really what it takes to make them successful. And so we really appreciate you presenting tonight, and hopefully you'll stick around a little bit in case anybody has any questions after our haps and whats.
You bet, we'll be here. So thank you again for having us.
You bet.
Thank you, Vern. Thank you, Renee. Thank you all.
All right, so let me get back to my screen here. And it's not working very well, but this is our haves and wants time. So we'll just leave it. Leave it open. If anybody has any haves or wants that they would like to express to the group, if you have a business you want the group to know about, if you have something for sale, if you are looking for a partner, this is an opportunity for you to do that.
I also have an announcement, Vern,
All right, Renee.
real quick. So thanks to Peter, who built our website for us. We did just add 2 new things to the dollar site, the Denver Association of Assisted Living Residences. I'm posting this here in the chat. The first one being a way for you to sign up to get current listings to your inbox. And that's under assisted living for sale. It's right at the top. And then also we added a get funding tab. So if you are looking to expand, maybe once you get your incentive money and you want to put that to good use to building your 3-pack or more, then you can absolutely check out that get funding tab and request a consultation. It outlines the program. If you haven't used our funding tab or our funding program, you can check it out there. So thank you.
Awesome. Good work. Okay. Anybody else have or want?
Vern, the 86 bed. Can you hear me?
Yes, sir.
The 86
Adam.
bed, how much is that and where is the proximity? Where is it at?
That is, it is east of Denver, and it's probably going to be in the 5.5 to 6 mil range. We haven't nailed down the total price. It's got, oh gosh, I'll have to pull up we're still working on the packet. There's a lot of square footage between 4 facilities. Very nice facilities with full bathrooms in almost every room. There's some land, about 6 acres, that is in an opportunity zone as part of the package. And there's also a small double lot with 3 buildings on it that they use for housing. So
Yeah, when you get some more information, I'd be interested.
okay, you bet.
Thank
We're
you.
working on the photos in the packet right now. we expect we should have everything ready in about 2 weeks to put out to the market,
Yeah, thank you.
certainly. Anybody else? Michelle, you have anything cool to tell us?
Wow, there's so much going on with the legislature and everything. So I would just say, keep your eyes on the RALNA legislative updates and the updates that Vern sent out. I think, Vern, you sent out an update for us recently about a Colorado legislation, but I think my want would just be, this is a regulated industry, everybody, and we have the most power when we stick together. So if you see something that impacts the industry, please lend your voice and make your voice heard on it, because we can have an impact. Otherwise, the big guys kind of dominate the conversation.
That's true.
Also, if you have anything that you want us to write on, I don't know if you follow our blog, but we've been, especially Jen from Arizona, has been posting a lot of very day-to-day needed legal tips. So if you have anything like that you want us to write on, just shoot me an email and we're happy to add it to the blog list.
Thank you.
Terrific. Thank you, Michelle. Okay, no other haves or wants? Then we're going to close the meeting actually a little early tonight. We always leave the forum open, so feel free to hang out and chat with people or ask some more questions. And we appreciate everybody coming out tonight. We hope to see you again next month, and we'll continue to try to bring you some value. So thank you, everybody. Have a good evening.
Thank you.
Take care.
Have a good
Thanks.
evening.
Thanks for the presentation, super interesting.
Thank you, Michelle.
Lisa, I have a question.
Sure.
So I purchased my facilities in September of 2020.
Okay.
So for the PPP loan, I used, since it was a change of ownership and we were eligible to use the previous owners' 941s and, information for 2019. Do these credits work the same way that I would be able to use his information for 2019 to apply to my numbers?
So did you have a change in tax ID number with the
Yes.
part? Okay.
So I
So we-
purchased his assets, not his business, but the change of ownership, we still qualified for the PPP based on the way we did it, but we have a new tax ID number.
Okay, so there's a couple of different ways potentially. So there's under the credit, there's what we call the recovery startup provisions.
Mhm.
And we would look to see if you would meet that requirement. So that's typically for organizations that started their operations after February 15th of 2020
Okay.
would qualify. So, but because it was an asset purchase, we may not be able to qualify you under, because it may, from the IRS perspective, it could be a continuation of business, even though we do have a different tax ID number. But typically we would look at, there's other guidance under the credit that if you didn't have access to the previous owner's information, we could look at it, your gross receipts from your
So-
quarters that you did own it. But if you
Maybe
do have,
worth a consultation still.
yeah, oh, for sure. I would say definitely, for sure.
Okay. Thank you. I will make an appointment.
Okay, great.
Appreciate it. Great presentation. Nice information. Thank you so much.
Thanks, Barbara. Sandra, are you still on the line there?
Yes, I'm still here.
Okay, I didn't know if you may have been related to another Jeff Reynolds, but
I'm not familiar with his
Okay.
name, no.
gotcha. We'd worked with somebody also in the Colorado Springs area with your last name, so I thought maybe a connection there.
Okay.
Well, nice to meet you all again. Thanks for having us.
Okay. Thanks.
This was great.
All right. Good night, everybody.
Good night.
And Vern,
Good
yes, I
night.
will send you the slides to put on the website.
Thank
Right.
you. Appreciate it.
All right. Have a good night, everybody.
Take care, everybody.
Yeah.
Good
Thanks
night.
again.
Bye-bye. Thank you.